Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies and their PLTR stock. In this video, we will be analyzing 3 articles, to where the first one is titled, Is there an opportunity with Palantir Technologies Inc.'s PLTR stock? 42% undervaluation. So essentially, this article is going to be analyzing and going over a DCF model that tells us that this company is actually undervalued, making it a phenomenal buying opportunity right now. And of course, I'm going to be adding my own analysis and opinion on this article myself, but we'll get more into that later. Our next article is about a financial reporter who says that Palantir is at an inflection point right now and that the future looks extremely bright for this company if and only if you are a long-term holder of this company, which is what I've been advocating for a very long time, because in the short term, this company is going to experience a lot of volatility. And then lastly, but not least, we're going to be going over an article titled, Is Palantir the market's best AI stock? This one chart reveals the truth. So we're going to be talking whether or not Palantir Technologies is a good artificial intelligence or AI stock to buy right now. With all of that being said, don't forget to go and annihilate that like button for more videos on Palantir Technologies. Don't forget to comment your thoughts down below on whether you think Palantir Technologies PLTR stock is undervalued or overvalued, and then also don't forget to subscribe and become a member of this channel for as little as 99 cents, because that's what keeps me here on YouTube. But with that being said, I say let's jump right into today's stories. Palantir Technologies, ticker symbol PLTR, is a big data and analytics company which serves both commercial enterprises as well as government agencies. This company also specializes in artificial intelligence, and their PLTR stock price trades for $15.60 per share, while on the lower end, analysts believe this company could fall to as low as $5 per share, while on the higher bullish end, analysts believe this company could reach $25. And in this article, we're going to be using a two-staged free cash flow to equity model, also known as a two-staged DCF model, which is going to be a tool that we are going to be applying to determine this company's true or fair value valuation. Now, when we do this, you need to keep in mind that there are many ways to estimate the company's value, and a DCF model is just one method, so it's better to use multiple methods and average them all out instead of just relying on one. However, since this article is using a DCF model, that's the one we are going to be looking at today. We are going to be using the two-stage DCF model, which, as the name states, means that we take into account 2 different stages of their growth. The first stage is generally the aggressive higher growth period, which eventually levels off heading towards the terminal value, and that's going to be captured in the second steady growth period. So we're going to have their higher growth period and then their steady growth period, and those are the 2 stages we are going to be analyzing for this company. On top of that, as much as we possibly can, we are going to be using analysts' overall estimates and projections, but if we don't have any of those, we can only use educated guesses. We are also making a few assumptions here. First, we're assuming that the company with shrinking free cash flow will slow their rate of shrinkage, and that companies with growing free cash flow will see their growth rate slow over time. And then lastly, due to inflation, we're going to assume that $1 today is more valuable than $1 in the future. So without going over all of the math and everything, if you want to see the equation that this author used on screen, we are using the 10-year free cash flow estimate from 2024 all the way until 2033. You can see their overall estimated sources, their growth rates, the millions of dollars of leveraged free cash flow, their present value in millions of dollars, as well as the overall discount rate at 7.1%. And then we also get their present value of a 10-year cash flow, or PVCF, which is $17 billion. However, we still need to calculate the terminal value, which accounts for the overall future cash flows after the 10-year period. And if you want to see the equation for the terminal value, you can see on screen right here. And then we can use terminal value and then input that into our present value of terminal value equation right there. And then we can get around $41 billion for their present value of terminal value. Then to bring this full circle, the article says the total value is the sum of cash flows for the next 10 years plus the discounted terminal value, which results in the total equity value, which in this case is $57 billion. And even if you didn't follow any of that, what I said before, just keep your mind on $57 billion, because we're going to use that as the market cap of what the company should be worth, meaning that the company is currently trading at a 42% discount, thus communicating to us that that this company is undervalued. Right now, it's trading at around $15.60 or $15.41 as of the time of this writing. However, this analysis says that the fair value actually should be closer to around $26.70, which is mighty close to Wedbush's Daniel Ives estimate of around $25. So this means that this DCF model is relatively accurate, but again, make sure you understand that we are incorporating assumptions. And also keep in mind that the DCF also does not consider the possibility of cyclicality of the overall industry or the company's future capital requirements. So even if you didn't understand this more technical first part of the video, you just need to remember that $57 billion total market cap and then how that equates to the fair value of $26.70, meaning that this right now should be the fair value according to these assumptions and this overall estimates. But don't take this and run with it. This does not mean that the company will actually achieve this. Rather, it means that it would be still realistic for this company to achieve that in a relatively short amount of time. However, I think it's going to be rather difficult for Palantir Technologies to achieve this price over the next 12 months, but only time will tell. Now let's jump over to another article to where this author says that Palantir Technologies has reached an inflection point. Going forward, there are a plethora of bullish positive reasons to bet on Palantir Technologies' overall future. This author says that the bearish arguments or the negative arguments and critics surrounding Palantir Technologies do not do any justice because Palantir continues to scale their business at a relatively high CAGR. However, some bears say that it charges its clients too much money for its software, but it seems the opposite is currently happening because in Q2 alone, management was able to close 66 deals worth at least $1 million. And as the overall economy improves, there's going to be more possibilities for other enterprises and commercial clients to start to explore Palantir's technology. On top of that, Palantir Technologies also has a very high retention rate, meaning that once they land a customer, that customer is essentially there for life. And Palantir can use this to their advantage by upselling them on even more offerings, meaning that they are making existing clients pay even more money for more rewards. In addition to that, Palantir has multi-year contracts with multiple commercial enterprises as well as government agencies. So the ability for Palantir to attract new customers on top of their existing customers, which they tend to hold on to very tightly, is a phenomenal bullish sign for this company's future growth trajectory. On top of that, the artificial intelligence industry in general, specifically the generative AI industry, is expanding at a very aggressive rate to where many professionals believe this overall segment is going to be worth over $1 trillion in the following years. Therefore, since Palantir's generative AI platform, AIP, has done phenomenal things in the market, it seems that more and more clients are going to be signing up with Palantir Technologies. One segment focuses on commercial enterprises and the other segment focuses on government agencies. Both of these are going to benefit from artificial intelligence. As you know, the author of this article also says that they are likely to be included in the S&P 500 index during the following quarters. The only thing that Palantir would need to do to further qualify and meet all of the criteria to actually enter in or be qualified to enter in and be included in the S&P 500 index would be they need another profitable quarter, and then that would make them meet the criteria. However, this is a very controversial topic because not all financial reporters think that Palantir is going to join the overall S&P 500, but for me, I do. I think it's honestly just a matter of time before this happens, and there are also multiple other financial reporters that are split on this company. Some of them are downgrading Palantir Technologies and others are upgrading Palantir Technologies. For me, I would say Palantir Technologies has a phenomenal catalyst coming up in the form of a potential S&P 500 inclusion on top of them achieving loads more revenue due to artificial intelligence and their AIP platform from now well into the future. If you didn't know, what this would mean if Palantir actually joined the S&P 500 is that they would get a lot of money flowing into them because as a part of the S&P 500, it would force other funds and various investors to buy into Palantir Technologies if they invest or have an ETF or fund that tracks the S&P 500 index. So there's going to be a lot of indirect investing happening into Palantir Technologies, which is going to increase their overall market cap, thus increasing their overall share price. The only concern that this author points out, which I completely agree with him on, is that their valuation is rather high. Their price to earnings ratio is approximately 65 on a forward basis, and ideally we would want this a lot lower, because right now 65 or approximately 65 times is a huge premium, meaning that investors are paying a lot of money for not a lot of earnings. In a similar way, we see their PS ratio also being rather high, which we will talk about more in the next video. But despite all of this, it seems that Wall Street has made 10 upgrades of some sort for Palantir Technologies within the last 3 months. Even Seeking Alpha's quant system believes that Palantir Technologies is a strong buying opportunity if you are a long-term investor due to their amazing growth trajectory. Now, the previous two articles have been very bullish, but I do want to bring us a little bit back to reality, because we are going to be talking about how Palantir actually ranks in the artificial intelligence segment of the stock market. Palantir Technologies is normally included in lists of artificial intelligence companies, and in this article, we're going to be discussing where they rank on that list. Let's look at their Q2 earnings report, where Palantir brought in around 13% year over year in regards to their revenue, meaning that they grew at a compounding annual growth rate of 13% to around $533 million, which was just $1 million more than management's guidance. However, I would say that even beating management's guidance by $1 million is rather impressive, and while Palantir's revenue growth isn't anything outstanding or nothing close to what it was in the past, its margin expansion has been absolutely sublime. This has allowed Palantir to report positive earnings per share on a GAAP basis. They literally jumped from a loss of 9 cents per share up to a positive 1 cent per share. And I know that doesn't sound like a lot, but trust me, that was a lot of ground that was made up. But the only problem is, like we talked about in the previous video, is that their overall valuation is rather high, to where their PS ratio or their price to sales ratio or their PS multiple is valued at around 18.6 times sales. And ideally, we would want this much lower. Luckily, since their overall revenue is anticipated to jump up to a CAGR of around 19%, way better than 13% in 2024, that means that PS ratio and even their PE ratio will drop, to where their PS ratio will drop to around 14.5 times, which is much more digestible for investors. So with all of this information, where does it leave us? Should investors avoid Palantir stock? Honestly, I don't think so. If you are a long-term investor, you're not over-allocating yourself to Palantir Technologies, and you're willing to wait at least 3 to 5 years, this company could bring you in a lot of value over time. That's why this author advocates to invest a small position. Let me be very clear, a small position. Please remember that, a small position. I like to invest no more than a 5% initial portfolio allocation to risky singular growth stocks, including Palantir Technologies, and for you, it honestly should be no different. However, the future does look bright for this company, and I am very excited about their upcoming earnings report and future strong growth potential, and their highly talked about inclusion into the S&P 500, which has yet to be materialized, but I think will happen eventually. With that being said, don't forget to stay diversified, be smart, invest into a plethora of strong companies, subscribe if you're new, don't forget to go and annihilate that like button, comment your thoughts down below, and give me your price target on this company over the next 12 months. Don't forget to become a member of this channel to support me personally, subscribe if you are new, and I will see you in the next YT video.